All right, so I'm gonna go ahead and share my screen. But before I begin with the presentation, my name is Sidrit Veselaj. I'm a loan officer with Guaranteed Rate. Um, I've been in mortgages and banking for about 10 years. For the last 3 years, it's been mortgages only. I've graduated from Suffolk University with a finance degree, and I mean my passion's always been to find solutions for my clients. So I really fit into the mortgage industry, and have been growing ever since. Part of the Guaranteed Rate family for the past month and a half. Best decision I've made. I'll talk, just to talk about the agenda a little. I'm going to talk about conventional loans and first-time home buyers, and cover Guaranteed Rate a little. Then we have a platform called Agent Advantage, which we'll cover on a smaller presentation as well. And then we'll open it up to Q&A, talk about social media, collaboration, and how we can all help each other. All right, so conventional. So to talk a little bit about Guaranteed Rate, we're anywhere between the top 3 to top 5 lenders in the country. Our CEO, Victor Ciardelli, believes in having the best technology out there, lowest rates, and obviously providing some of the best client experience. As you can see, we have some of the lowest complaints through CFPB compared to any other lender out there. So that shows you a lot that it's not a coincidence that Guaranteed Rate is where it is. It's the processes that we have in place, the technology, and the numbers do show that. And last year we ended up closing almost $80 billion in volume. So to speak a little bit about our digital mortgage process, it can take anywhere from 10 to 20 minutes. Everything is online. A lot of times, it will verify a lot of things automatically. So for example, we have to one of the things I do have to verify and check is bank statements. So the digital mortgage process, will do that for you. In many times, it will save you the hassle of many lenders will ask you the last 2 bank statements. The system should be able to, for most banks out there, get that for you and save you that hassle as you're applying or as the client is applying. And we can get a pre-approval. I would say within the same day if the client has everything that we need. To your W-2s, to your tax returns, the bank statements if needed, then this is your typical W-2 borrower. Then we can get them, ready to shop for a home within the same day in many cases.
Really quickly, do you have a PowerPoint right now that you're sharing?
I am. Can you see?
No, I'm stuck on this black screen that says Guaranteed Rate.
Okay. I was going through the PowerPoint. I'm sorry. Can you see me?
I can see. Bill, can you see the PowerPoint?
Can anyone see the PowerPoint?
No, you might have to.
No.
I can't. Let me stop sharing and let me share again. I'm so sorry about that.
That's okay. Now we see it.
Yeah, there we go. I thought
these were the slides that I was covering. Thank you for bringing that up, Tegan. So this is where I kind of left off with the digital mortgage. So when we're done with the presentation, I can send you guys all an email, and you basically go to my website, and or you give that website to your clients, and that's where they would search loan options, or even start applying for a mortgage. Loans that fit your life. So just to you know, so you have an idea on the types of mortgages out there. Your most common mortgage will be a 30-year fixed mortgage. It's the most typical loan out there. It provides you know, fixed rate. It's the same monthly payment. It's available in 15 rates. I don't see many 15-year mortgages for first-time home buyers. Very, very rare. It will be someone that is very, very established, I would say. But for a 30-year fixed mortgage, that's going to be your most common mortgage out there, 30-year fixed. It provides a low monthly payment for most borrowers. And, you know, people that are, you know, I mean, you obviously know, but some of the people that will seek a fixed rate mortgage is people that are looking to stay long-term, families seeking good communities and schools for their kids. That's a number one out there, I would say. And also renters that are tired of renting and looking to build equity instead of giving that money. Another type of mortgage, adjustable rate mortgages, their rates are lower typically than a 30-year fixed mortgage, but it's more tricky because it's a 30-year term, but the rate is only fixed for 5, 7, or 10. Now, this is ideal for someone that let's say finds a job and knows that they're in the area temporarily, and they can get a lower rate than a 30-year fixed. So that makes sense. But you know, it's common for only a certain type of borrower. And other loan options, so jumbo loans, so we have conventional loans, which are, you know, the loan limits, the conventional loan limits are somewhere around 550,000. We have, you know, we're one of the states where we have a bunch of high cost areas, and that loan amount will increase to somewhere around 725,000. All that means is if the loan amount exceeds the conventional loan limit, now we enter into a jumbo loan category. All that means is that there's less lenders out there doing jumbo loans, and the guidelines may be more strict and tightened for that than a conventional loan. So let me talk a little about conventional loans. So conventional loans are loans typically sold in the secondary markets to Fannie and Freddie. Fannie and Freddie Mac, they're government-sponsored entities. They're separate companies, but all they do is they purchase these mortgages and they sell them to investors, pretty much. And it's called conventional because we go by a set of standard guidelines. And this allows all the lenders in the US to do these mortgages, sell them to Fannie and Freddie, and do more mortgages. And that's how, you know, we provide us, you know, Fannie and Freddie provides like a sound investment because they're being sold out there with, you know, it's pretty much the risk, you know, the risk criteria, it's kind of stable, I would say. Now, these conventional loans, as I said earlier, have a max loan amount that will be adjusted as, you know, the home prices out there increase or decrease for that matter. So that being said, you know, like you have high cost areas. So a bunch of our counties here in Massachusetts, you'll see like, you know, the 724 max loan amount rather than, you know, the 550 or 548. The conventional loans this is your most common type of loan. You can have a borrower with a minimum credit score of 620. You can do as little as 5% down, but there are options out there. It's called Home Ready and Home Possible, that they will let you do even 3% down on a single or a condo. But for those programs, there may be income limits. So for example, if the area median income is 100,000, the Home Possible or Home Ready may have an 80% limit on that. So your borrower, if they make more than 80,000 or whatever that limit will be, they would not qualify for a Home Possible or Home Ready. The other thing is you have the, you can do, let's say, gifted funds for conventional loans. If you have, it has to be from a parent or a sibling. It has to be close family, and I've seen as close as uncle and aunt in terms of gifted funds. A lot of things are flexible, so in many times, especially now, you'll see folks, like getting appraisal waivers. So let's say if you're doing 15 or 20% down, in many cases, you'll get like appraisal waivers. That means that Fannie and Freddie, the automated underwriting system that we use, they'll say, oh, this property checks out, for example, and they don't need an appraisal. And just to keep in mind with conventional loans, anything under 20% may require for you to buy, may require the borrower to purchase mortgage insurance. So pretty much the lender is looking to insure this mortgage in a sense in case the borrower defaults, since they haven't put 20% down. I'm not going to cover too much. Maybe this can be another presentation, but FHA loans, I mean, this is a great alternative for first-time home buyers, especially if you're looking to buy a two-family with 3.5% or a multifamily up to a 4-unit. Obviously, for three and 4 units, there's other restrictions, but it's definitely a great program for first-time home buyers, but there are costs associated. USDA loans, these are rural loans in rural areas, and 100% financing is available, so 0% down. Same thing for VA loans, which is for veterans. But we'll spend time another day on those. Really quickly, what the mortgage process looks like. So it typically starts with me. I'll talk to the client, get a great idea on what they're looking to do, and I'll send them the link, have them fill out all their personal information, and in the meantime, I'm going to request them these documents. So 2 months of most recent pay stubs, 2 months of their most recent bank statements, 2 years of federal tax returns and W-2s if they're your regular W-2 borrower, and then we'd get them on their way to start shopping. So pre-qualification versus pre-approval. A pre-qualification, I would say, is I don't do any pre-qualifications, but that would be someone that applies and they just state their income and they say, hey, Sidrit, I'm making $100,000, but I need a pre-qualification right away. I've pulled their credit. So that pre-qualification is only based on what they're saying and me getting a quick read on their credit report. But so that means that I haven't verified any of their documents, and I would be, if I was a realtor, I would want to see a pre-approval rather than a pre-qualification. So then that's where you guys come in. They have the pre-approval and you guys start shopping. Hopefully you find a home right away. But yeah, I mean, this is where, they have that pre-approval. They're good for 3 months to shop out there. And hopefully, if they find the house, we'll move on to signing their offer. So here in Massachusetts, they sign an offer first. The client will sign an offer, then move on to the purchase and sale agreement. And that's where, you know, they're giving them their earnest money deposit. Typically it's 1,000 for the offer, and then 5% of the loan amount for purchase and sale, but that can vary. That's what you work out with your clients. And that's where we start doing our job. We lock the rate for the client. For now for purchases, we're locking at 45 days, but we should be able to close within 45 days. I think for purchases, we're looking anywhere from 30 to 45 days for closing these days. That's where we're order appraisal if needed, order property title with the attorney, tax transcripts from IRS, and everything that's needed. And this is where the process is really good at guaranteed rate, is that they have that very, very well streamlined. And once we get the loan to the underwriter, typically it takes, once we submit to the underwriter, it takes anywhere from 24 to 48 hours for the initial approval. So we'll get the conditional approval. The underwriter will tell us any updated documents that they need. And the final processor will get on working those things with the borrower. And we're then ready to close. So we'll work on the final closing disclosure at least 3 days before closing. Typically, it's done much sooner. And yeah, here we're heading to the closing table. You know, so that's the big day for all of us, all of you, and yeah, myself. So where I want to, so my next slide will be for agent advantage. An agent advantage, I mean, I'm not going to spend too much time, but everything that I spoke about in the process of the client, let's say you do send me a referral, you know, I work with a client, they're ready to go. If you're logged into Agent Advantage, you're able to see every step of the way what that client is doing. So you're monitoring your loan throughout the whole time. Is the easiest way to connect with your client. We have co-marketing tools. Me and Diego actually started using the co-marketing. I mean, I'm still learning the system myself too, but we can do joint marketing. And let me see if I have something here. So I can.
You guys, this is not to interrupt, but this is a really good tool. I know a lot of you have been doing a lot of open houses, so you can put together those rate sheets and you can have people see, you know, if it's a $500,000 home, what their monthly payment might look like. And it gives you some really nice resources to have so people can see actual, you know, hard numbers. And you can do it for any property, any open house. So this is a really good tool to have.
Exactly. And so this is just an example of one of the flyers that I started with another agent. But yeah, there is so much marketing stuff out there that we have available, and, you know, including the rates. So it's a no-brainer on not to use. And then, you know, I know some of you are just getting started in the industry. They have a lot of coaching videos from other top realtors out there. So let's take a look here. So essentially kind of like what I mentioned earlier, you can refer a client. It's all in our system. Once that client is pre-approved, you'll see their pre-approval, and you know, you'll see the whole loan in progress. And let's say the loan is clear to close, you'll get that notification, or loan is conditionally approved, you'll get that notification. So you'll know where the client is during this process. There we go, real-time updates. You can set up drip campaigns and email marketing. You can set this up as a Salesforce tool. I know EXP is great. I hear they got some of the best technology out there, but this could be your backup too, if you want. It's completely free to you. But essentially, let's say you have an open house and sorry, let me find, I'm trying to find this. Yeah. So there's this open house app. I mean, I don't know how fancy you want to get with this, but let's say if you have an iPad there, having your clients log in, whoever's coming to your open house, they put in their basic information and boom, they're part of your database. And that's being stored into your Agent Advantage account. Other things that you can do is you can instantly generate property flyers just by putting the MLS listing or the MLS number for whatever your listing is, and it will generate a nice looking flyer in seconds. On top of that, you can, do a website within seconds as well, doing the same type of, having your, putting the MLS number in there. It will generate a customized website for that listing based on the pictures and everything that's posted in there. And then you can post that on your social media pages and promote it how you see fit. And it just looks better with your sellers too. Just another professional tool. And that's totally free. You don't have to use it, but it just, it takes probably, 5 minutes or so to set up, to get your profile set up. Diego kind of has a little experience through that. But yeah, it's free. Why not use it? And once you register once, and let's say you're lazy to print co-marketing stuff, you could tell me, hey, Sidrit, just, print me a joint, rate flyer, and I'll print that out for you. And my office will be located in Braintree. I'm just waiting for, my furniture to get here. But once I have my office set up and you want, let's say, you want some flyers or something printed in color, I can do that for you. We can meet somewhere and I'll hand those to you. And whenever I have goodies and stuff, I'm happy to, give that to you so you can share with your clients. And yeah, so sorry, let me come back here. Can you see me? Can you see me?
I can see you.
Oh,
Yes.
perfect.
Yes, I can see you.
So yeah, I mean, we'll open it up for Q&A, but before we do that, I want to say I'm all about social media. I've made social media a top priority this year. Anything we can do to collaborate together and work together, and how we can bring value to our clients by educating them more. I'm doing a lot of first-time home buyer Zoom or even in person. I don't mind in person seminars. So I'm up to any idea that will promote our brands out there. And I love EXP. You guys have done amazing. I know Tegan's done amazing. I've followed her, I think, from her initial steps on Instagram, and it's been just growth. And we gotta surround ourselves with these type of leaders so we can all grow together. But yeah, let's open it up for Q&A.
Yay, well, thank you so much, and thanks for those kind words. And you guys, I'll open it up first. Does anyone have any questions? You can unmute and introduce yourself.
Yeah, Jill Ripley. How do you get the rate that explains, what it might look like for payment for a buyer for an open house, and how would you also sign up for the Advantage agent?
Yeah, so I can send you all a link right after this. I believe I have all your emails in that last email that Tegan sent. But in terms of rate sheets, it will say co-marketing when you log into agents.rate.com. You'll create your own profile first, but then once you're all set up, it's pretty easy. And you'll have a bunch of them, but essentially, I mean, you'll have a rate sheet with my rates, or you'll have like a comparison of, let's say, what a 200, 300, or 400,000 loan would look like. I wish I had like a navigator to that website. I do not, but it's fairly easy. I mean, let me send you all the link, see if you can sign up, and then we can follow through with like if you have any issues, I'm happy to go over that with you.
Sure. Then my follow-up question is, how do you, so I saw that have, the agent can see where the client is in the loan process. How do you sign up to be able to see that?
Yeah, so it's through the same platform, through Agent Advantage. Let's say you're referring that client to me. In our system now, it's going to be tracked and connected that this is our client. I mean, you may be working with different loan officers at Guaranteed Rate. So just make sure that you're picking my name if I'm the loan officer. But let's say you're referring me a client, it's pretty much in our system that, Jill and Sidrit are working with this client. And once, I start an application, the loan goes live, the system will know to feed you the status.
So would I refer to you from the system, and that's how it would connect? Is that how the referrals go?
You can refer from there. You can refer to me through text message, whatever is easiest. I'll make sure that I put your name, that you're the loan officer, which I will in my system. Even if you don't do it through Agent Advantage, I can still pick you in my system that you're the you're the realtor, the buyer's agent. And then you're gonna still, as long as you've logged into this system to Agent Advantage, you'll get those status updates on your loans.
Excellent, thank you.
You're welcome, yeah.
Yeah, I have a question.
How's it going, Diego?
How's it going, man? So it's really simple. Do you ever write blogs for your social media or for websites?
I honestly haven't done blogs, mostly due to time constraint. I would say that they're good. It's very popular. I mean, clients or folks are into different types of, some people love video, some people love reading better. It's a good alternative to social media, having your own blog or website. But just like anything else, it's like where you focus your priorities. My priorities this year are videos. I think that's where people engage the most, and I want to do more YouTube videos, but also short form videos. I think are what people are looking at the most. And you see with TikTok, it's a short form video. It takes between 10 and 15 seconds, and you move on with your life. You don't need to spend.
Right, yeah.
But when you get to YouTube or other services, IGTV, where something is half an hour long or whatever, that's where now that's for a viewer that's a little more dedicated. They've seen you for a while, but now they want to really go deep on your content. So but yes, I mean, blogs are great, but my focus will be on video this year.
Great, thanks, Chad.
Yeah, anytime.
I have a question, because as you know, we have so many of these new construction listings. So I have a few of the team members who are on this call helping me with those listings, and ideally I'll represent the sellers, they'll represent the buyers. Because they're not completed units, is there anything that these guys should keep in mind in terms of like the entire process? Because as we all know, it goes from accepted offer to PNS, then there's the mortgage commitment, and then there's the closing. So is there anything that they should look out for in terms of like if some inspections are to be delayed, how will that affect the mortgage commitment, things of that nature, just like things that they should keep an eye out for and update you if it does kind of come up?
Yeah, that's a great question, and you know, it is something that does come up a lot with new constructions. A lot of times the builders want to go under agreement right away, and like I've seen like projects that are, you know, it will take another 6 months to finish, and you know, the builders or the agent will want to like sign an agreement, you know, which is fine. Make sure that, you know, that client is pre-approved somehow with the current rates, but you may want to put something on the purchase and sale that can give this client a way out in case, you know, if you're representing the buyer, you want to put something in the purchase and sale that's going to protect them. Why I say that, let's say we're in an adverse environment. They sign, you know, they sign the purchase and sale agreement that 3 months down the road, you know, they're going to get in this project, it's going to be finished. So we can technically order appraisal until this project is finished, or like I would say 90% finished. If it's like landscaping, you know, waiting to be done, it's fine. But let's say the project is 3 months out, I'm pre-approving them now, or 6 months out, I'm pre-approving them now, and the buyer 6 months from now loses their job. You know, you got to put something in there that will allow the client to walk out without losing their deposit. And that's the mortgage contingency clause in many cases. But a lot of times I hear builders, you know, they don't want to put a mortgage contingency clause 6 months from now. But there's got to be a way that everyone is safe. You know, you gotta have to figure out, you know, because you know, I get it. You know, the builder wants to sell them as soon as possible, but the buyer also wants to get a great deal too. So there's risks on both ends, but I think there's always, you know, there can always be a common ground. That's what I would look out for. But as the project is being complete, that's when we'd start the application, the official application, order appraisal. You know, if things are not finished completely, we'd need to have that appraisal go out again. And then for condo docs, I mean, I would have to double check. Maybe I can get back to you, but there are certain restrictions, you know, on how many units, you know, when it's like a brand new construction. If there is many units, I mean, certain units may need to be sold already, or the builder cannot own like 100% of the whole project. That's one thing I'm going to double check for you guys. And we also have a builder program that they're talking a lot about it. And, you know, I'll share more of that as I go and with your team.
Okay, that's good to know. And I think that's a good point to bring up too. Yeah, that definitely helps. I have now a couple follow-up thoughts and questions, but so that's a really good point to bring up, because obviously this team works with a lot of new construction, and we will be getting into like a lot of the higher end and higher valued homes this year. So I think a lot of times too, the jumbo loans come into effect. And I know, because I was speaking to someone the other day that has some of these listings with a jumbo loan. So a jumbo loan is anything over $1 million?
Not necessarily. So in areas around here, it will be a loan amount over 725 for a single or a condo.
Okay.
When you want to keep it, we have many jumbo lenders. What you want to keep in mind is that we may not be able to find a lender with 5% down on a jumbo loan. Or if we do, prepare that client that, you know, they're going to be paying a higher rate, or, you know, like, and it makes sense because the lender is taking on more risk. And because these types of loans, they're not available as much as conventional loans. You know, it's at the discretion of the lender. So during coronavirus, and still, I mean, a lot of lenders, let's say, they decided to increase their credit scores on jumbo loans. So let's say if they had a 680 minimum credit score, now they went up to 720, or even 740. But you'll have loan to value restrictions from lenders. You'll have minimum credit score restrictions. Yeah, so just be mindful of that. But I mean, someone that's purchasing $1 million home, doing 20% down, they're getting in a jumbo loan program. It should be good. I mean, that borrower technically shouldn't have a 620 credit score. If they do, they gotta try to figure stuff out, and how we can help them fix their credit.
Sidrit, I have to hop off another meeting, but I'm looking forward to your email, and thank you.
Thank you, Jill.
Thanks,
Likewise.
Jill.
Invite. Thank you.
Bye. Yeah, and I think with the jumbo loans, they seem to be very strict in terms of those vacancy rates. So, if you have a building with 8 new construction units and you go for a jumbo loan and none of the units have been sold, like you were saying before, they are going to look at that. And obviously the builder will own those 8 and they probably won't qualify for the loan.
Yes. So, but that's one of the benefits of working with guaranteed rate is that, so first for conventional loans, let's say if we cannot do something conventional, we have like brokers out there that we can go to. Second, for jumbo loans, we have, I don't know, at least 15 to 20 jumbo lenders. So if something doesn't work with one lender, we can keep searching, and we can keep asking. But things are fluid now. I mean, we're seeing some reduction of these, the tightening of the guidelines. It's getting less strict as we kind of like head out of this pandemic, and it all has to do with the risk. One thing to keep in mind with everyone is self-employed borrowers. We are, if you do have a self-employed borrower, have them be prepared for extra documentation. We're going to look at, obviously, their last 2 years of tax returns, but we're also going to look at their year-to-date P&L, profit and loss statement, and unaudited. It can be from their accountant. But essentially what Fannie and Freddie are looking at is that let's say their 2019 income or their 2020 income was at least the same or higher than 2019. Because they know that self-employed borrowers were one of the areas that were affected the most, small businesses. So there will be extra due diligence, and they're going to want to verify with their bank statements that they're actually making that much money per month, that they're on track, let's say, to make $100,000 in revenue, let's say, just a quick example. So yeah, W-2 borrowers, conventional, I don't think they were affected whatsoever during COVID in terms of guidelines, none. Minimum credit score stayed 620. But for self-employed, yes, there were extra scrutiny. Jumbos, obviously stricter guidelines. FHA, also stricter guidelines. But
yeah,
they're going back to normal. They're going back to normal.
Yeah, that's one other thing I was just going to mention. So just so everyone on the call knows, FHA typically is for a multifamily, but there are strict guidelines in terms of when they're inspecting the property. So common ones that come up are chipped paint, because the bank's looking for lead paint. And then also they're very strict about like having hand railings on like steps and entranceways. Those are something if you don't have, and decks. too. I think chip paint on decks, if you're going to show a property and you know the buyer has a pre-approval and they are an FHA buyer, if you go to show the home and there's like chip paint on the decks, just be aware that that's something that will have to be fixed before the bank comes to inspect the property.
Yeah, or I mean, the appraiser may come out there, but they'll make the loan subject to, or the appraisal subject to these things being fixed.
Right. And you want to try to fix it beforehand, just so you don't have to have like anyone come back to the property and then you're doing, double the amount of work. So those are things just to keep in mind, and you'll definitely learn as you go too.
Yeah, but I mean, it's a great first-time home buyer program, FHA, no doubt. Especially for folks with, that they don't have too much funds, or they're tight on cash, and their income is kind of on the line. FHA kind of provides them that extra, so let's say if for a conventional deal, we can go up to between 45 to 50 debt to income. With that FHA, we can go up to 50. If it's a low credit score, there's going to be limitations, but for the most part, you can go up to 50% debt to income. And during normal times, I mean, there were some lenders doing even 55 debt to income on FHA. So. I bought my first home with FHA, so FHA loan, 2-family, 3.5 down. Just we can do another one and go deeper on FHA. But I think our next one is about TikTok. I'm excited about that.
Yeah, we're gonna get on TikTok, and
we're gonna get everything sorted out.
Yeah, so everyone make your TikTok accounts for next month. I think it's in a few weeks. I put something on the calendar. But this was very helpful. Does anyone else have any questions? Just keep in mind, as you're working with buyers, before you show someone too many properties, you want to make sure that they have a pre-approval letter, just so you're not wasting your time. You don't want to go show 100 houses and then they decide to write an offer, and then you find out last minute that they're not qualified to purchase the house and they have no money.
Yeah, true that. And if you know that your client lost their job, or they had a change in income, or just, let them know that, hey, speak to Sidrit because your pre-approval may change. So just be mindful. I mean, yeah, that's all. I mean, but we're all in the same team working, to get the client to buy their dream home, and we'll hopefully do it in a good and speedy way.
Yeah, absolutely. And I like the idea of collaborating on videos and Instagram and Facebook. So I'll connect with you after this, and maybe a few of us can meet up in the next couple of weeks at the office, and we can have Caleb do a nice video. And just keep in mind that a lot of agents do like live webinars on Instagram. I used to go live a lot at the beginning of the pandemic. A lot of people film little videos with lenders explaining what a pre-approval is. So if anyone wants to collaborate. Are we?
Are you guys on the Clubhouse app? That's a new social
No,
media.
but I just heard about it yesterday. I was listening to a podcast, and I think it'll be the next big thing. So it's another thing to add to the list.
Another thing, yep. Yeah, it's picking up a lot of steam. It's like an audio only format, social app, and I think for people that are a little shy in front of the camera, it's probably a great way to start through Clubhouse and then move on to the other video form. But it's great because, especially if you do like podcasts, it's similar to that. It can get hectic because you can have 10 people talking at the same time too, but it's cool. I mean, I did it. I was trying it out last night, and I mean, I just had like one other person join me. But yeah, it's like free talk, and yeah, let's definitely do more of these. I mean, I'm happy to do it. Yeah, once the office is ready, we can certainly meet. Do some content. If you need ideas for social media content, I'm all up for that. And yeah, let's market ourselves. I mean, social media is not going anywhere unless we get banned
Yeah.
from Twitter or Facebook. But I don't know.
And your new office will be in Braintree.
Yes, right near the Braintree Mall. It's Wood Road, 140 Wood Road.
All right, great. So we'll all swing by.
I have one
Yes,
question.
Sam?
Are you servicing all of Massachusetts?
Yes.
Okay.
Right now, I'm only licensed in Massachusetts, but my next licenses I'm planning is New Hampshire, Rhode Island, and maybe Florida.
Okay.
Those
Not
are
Connecticut?
Yeah, I mean, hey, if you have clients in Connecticut, let me know. We'll get it. Yeah.
That's just a thought for down the road. I don't have any Connecticut clients, but I live 15 minutes away, so.
Oh, you do? Nice.
Yeah. Mm-hmm. Okay.
Yeah, I think one good thing about the pandemic is that it's made all of us or many companies work from anywhere. Like I know Guaranteed the Rate has processors all over the country. As long as you can get your job done, like it doesn't matter where you live, which is awesome. And yeah. Anyone else?
Awesome. So this is really helpful.
Yeah,
Any other questions? Okay, well, we will look out for an email with all the info that you covered today. And if anyone wants to collaborate for YouTube or Instagram, we can definitely get some video, and you'll be in Braintree. And I think no more questions. Carlene said thank you.
Thank you, guys. No,
all right,
it
well,
was
thank
a
you.
pleasure.
It was
Thank
great.
you.
So I'll pop this recording too on YouTube so everyone has it, and we can cover anything that came up. And if any more questions come up, just reach out to us.
Thank you.
Yeah.
Thank you, Sidrit.
You'll be sending out that slide, right?
What is it?
Yeah, you'll be sending out that the slideshow that you were showing us.
Yeah, I can actually send you both slideshows. I'll send you a separate invite to Agent Advantage. I mean, Diego, you're already in there.
Yeah.
And then any other information, I'll try to find, regarding the condo. I'll send that to you guys.
Perfect.
Yeah.
Perfect. Yeah, and we'll keep you in touch too of when we're doing those open houses over at Des Moines. So if you ever want to pop by, we should be over there. Yeah, probably every weekend. I'll be over there on Saturday.
Nice.
But
yeah, it's like 1 minute from my house. So yeah, I can pop in.
Good. They're coming along. I was there last night. It was a little bit dark, but yeah, hopefully we get you a few buyers for over there. So fingers crossed. I think Diego has hopefully an offer coming, but it's going to be a cash. So.
Yeah.
Hey, it's okay. We'll refinance that once the project is done.
Yeah, we'll have to do another training in the next few months on refinances because those were so big last year too, and good to be knowledgeable.
I think the best way to do it is let's put it on our calendar. If something comes up, we can always push it, but this is definitely the best way. Like we can try to do one of these once a month. I mean, it's reasonable. It doesn't take much, about an hour. So.
Awesome. Well, great. Thanks everyone for joining, and thank you so much, Sidrit. And we will definitely send you lots of buyers and offers and movies and everything else.
Thank you, guys. I'll talk to you later.
All right. Thank you so much.
See you
later. Bye.